Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over a potential crash, I would say, in the Nasdaq, and I'm seeing Bitcoin pull back quite a bit. We're seeing the 10-year yields drop, and I think people on the channel, if you've been with me for a little while, I was talking about the market conditions, and the market conditions are incredibly favorable for commodities. I'm going to touch on real estate. Real estate is ultra strong. I was reading through some articles. I got some snippets for everyone. But I said that there's going to be a time where things are going to diverge, where the stock market, Nasdaq, S&P 500 could potentially fall. And I don't know what necessarily that's going to mean for the commodity companies. It may drag it down with it. And with Bitcoin, and I think Bitcoin's highly tied with the Nasdaq, if I were to look at kind of some of those correlations, if Bitcoin's signaling that there's problems that are coming, I think Bitcoin's going to get blown out. And cryptocurrencies are going to get blown out. That's my opinion. We have retail all in this. They're putting in all their 401k money. They're going to get absolutely slaughtered. That's how it works. I'm not trying to be mean. It's just, crypto is, it's a bubble. There's nothing, I won't go too deep into it. It's crashing. It's highly correlated with the Nasdaq. The Nasdaq is throwing up some bearish patterns right behind me. That's the Nasdaq US composite there. It's got a bearish engulfing at the top there. Now, is this the exact top? Picking tops are really difficult, but the market conditions are ripe for a topping stock market. They've been turning better and better for a topping stock market over the past year or two. So I would suspect at some point here that the market's going to top. What does that mean? I can't call tops within 2, 3, 4 months. I'm saying within the next year or two, this is probably going to top out, or we're doing it now. It may drag down some of our commodities with it, but it doesn't mean that the commodities are bad investments. And I can't tell you if this is the top. I can't tell you if it's going to go up a little bit more and then come back down. But I wanted to talk to you about what this may look like, and it could drag down some of our commodities. I'm riding through it. I bought at very good levels, and I would still be a buyer if we see short-term strength. I would buy into them. I'm going to continue to cost average in and ride through it. The reason I would ride through it is I don't think this is going to be a blowout crash where it takes absolutely everything with it. It might for the very short term, because everyone is so leveraged up that if this pulls back, you might see people sell kind of everything. That's going to be a buying opportunity for us, because one, we know what we're doing. Two, we got a thesis and a strategy. We've got portfolio position sizing. We know the companies that we want to go into. We know where money rotates next. We know what to do. Now we have to be strong, disciplined, and focused on how to execute, because this could pull back. It very well could, and it's affecting our investments right now, I would say. The stock market doesn't drive the overall market. It can have somewhat of an impact, but it's not as big of an impact as, say, the real estate market crashing. So I've got this behind me. We've got the Nasdaq composite. It's starting to come down. You can see it right here. This is a bearish engulfing pattern, and it's got a nice, good, strong sell-off day next to it that ended pretty strong. We go into a 1-year look. Here's your bullish, bearish engulfing, and I'm looking for other bearish, big down days, small up days. And over here, we're starting to get a lot of big down days. That's how it starts. It starts with a lot of selling pressure, and then the buying pressure is a lot weaker. It's difficult to say that this is necessarily a top. I don't want to be trying to call the exact tops. What I'm going to say is we're starting to see signs, and it may take some time for this to play out. It may take a year or two. So somewhere within 2 years is my guess. And I was looking at the Bitcoin price, and Bitcoin's highly correlated with the Nasdaq. Here's Bitcoin. It's down 12% and a huge crash from 4:55 a.m. all the way down to 5:35. And you can see the bounce. The bounce isn't as big. If you look at the 5-day, you can kind of see this thing roll over and drop off a cliff. And we were at November 8th, we were at 67,000, and this thing's starting to really start to accelerate to the downside. Again, I don't know if this is the necessary top. If you were to ask me if this is a top, it sure looks like one. I compared this on Twitter to a pattern of SM Energy, where you get this kind of this pattern here, comes down, comes up, and it tops, and then it blows out quite dramatically to the downside, right where it's at. I said that this was going to be a topping pattern. I didn't know how high this was going to go, and I thought maybe this one might be it, but it went up all the way to basically do almost a double top, and then it's going to crash here, in my opinion. I wouldn't touch cryptos because I don't know how to value them. I don't even know what you own in cryptos. But either way, it doesn't look too hot. It looks like on a daily basis that this thing's crashing out, and it is correlated to the Nasdaq, which has been getting hit pretty hard. We do have the 10-year yield dropping quite dramatically, breaking out of some support, which means I think we're going to have some short-term fear. The fear in this market is quite large. So I do think we're going to continue to maybe sell off here, and it may impact our investments. Maybe, maybe not. One thing I was looking at was the CRB to S&P 500 index. I think I have that down here. Let me get to it. Here's the CN. And what's happening is our CRB index is outperforming the S&P 500. The S&P 500 is falling, and our CRB index is either falling less or remaining quite stable. When looking at this, we broke out of this downtrend line to the upside, and I think we're gonna move all the way back up here because we have the ripe market conditions for that to happen. And if you go to a 1 year, you can see that we are finding support here with the big bullish engulfing, ready to move on up for this ratio. What I'm trying to do is set the market conditions so you guys can kind of align and get your paradigm right. I am suspecting a pullback in the market. S&P 500, Nasdaq, composite, that it could pull the commodity stocks with it, maybe not. It's difficult to say. This was the spot I didn't know exactly what's going to happen. I'm going to think that it's going to pull it back some because you're going to get the leverage in the market, and they're going to get margin calls, and things are going to happen. So you can see a kind of a quick downward move. And I'm not selling out of my shares. What I'm doing is I'm going to be a buyer when this thing comes down and cost average in. And what we need to do is prepare ourselves for this move mentally, and what companies you guys like, what you're going to get into. I'm going to be getting into oil, uranium, and precious metals. Those are kind of my three that I really like. I think the energy sectors, if they get hit hard, I'm going to go big in those again. Uranium, natural gas, and oil. So those are the spots that I'm going to be in. I was looking at some articles, and it's coming. The home sales, these guys that are calling tops in real estate, they're so far out, and they're going to call tops again because they're going to say sales are going to decline, and they are going to decline because they have no homes to sell. We are drying up inventory to like bare bones. Probably never going to see the inventory this low in our life ever again. We have millennial, a larger demographic coming into home buying years, coming in and buying all the homes. We do not have the inventory. We do not have the increase in new homes being built fast enough. So I'm going to kind of read some articles here. It says, suburban New York City, home sales plunge because there's nothing to buy. There's confusion that falling contracts means declining demand, but that's not the case, said John Miller, president of Miller Samuel. The reality is demand is unusually high, but there's just isn't enough inventory to satiate it. Buyers are snapping up homes faster than sellers are listing them. In Long Island, excluding the Hamptons, there are 1950 signed contracts last month, or 13% fewer than a year ago. At the same time, new listings fell 26% to 1751, the firm said. Here is Denver. Supply of homes for sale dried up in November across Metro Denver. Median price of single-family homes back at $600,000. Snow wasn't the only thing missing in November, or in Metro Denver in November. Home listings dried up and the inventory of available properties down by a third from October. The shortage is so severe that single-family home prices revisited record highs reached this summer, according to a monthly update from a Denver Metro Association of Realtors. This is going across the entire nation. Obviously, there's going to be some spots that have inventory, but the majority of it is across the nation. Home prices going back up to record highs in the weakest part of the year for home sales. This is supposed to be seasonal. This is supposed to be the weakest month is December. And we're coming right back up to highs. We don't have any inventory. I've said this before. We have no inventory. Home prices can't go down if you have no inventory. You have to build the inventory back for home prices to go down. This is where major market crashes come from. It comes from real estate. And I'll jump into this. It says there were 1,444 single-family homes for sale at the end of November, down about 40% from October and 17.7% from a year earlier. The supply of condos and townhomes fell 22% month over month and 52% on the year to 804 listings. 804 listings in Denver is absolutely nothing. Normally, the inventory of homes for sales drops 11.4% between October and November, and last month's decline was one for the record books. So I'm going to go over this chart here, and it's important to understand this, guys. It really is. This is new privately owned housing unit starts. And get off this one here. I accidentally cut off the bottom here of the year, but this is recent 2022. I grabbed it. November 17th is when it was last updated of 2021. This is the real estate cycle going across the average. These cycles here in this expansionary phase is when commodities goes berserk. That's when you have inflation. This was 2000 or 98 to 2008, and every time you have a decline in housing starts, a good decline, you'll get a recession. Because what that is it's a deleveraging in the economy. When you go into an expansionary phase, it's a leveraging up and it's a deleveraging coming back down. And every time you come back down quite dramatically, you get a recession. Recession here, and notice how it's always a decline before it. A decline before it. Let me get some fatty thing here. So it declines. This dark line's recession. Declines, recession. Declines. Now, not every decline is a recession. We didn't have one here. Decline, recession, declined, recession. This decline there is a recession. We have a recession. This is the recession of the Nasdaq bubble. It wasn't a very big one. It didn't blow out the housing market and the commodity market. The commodity market went far higher under that period. And then here's a blowout decline that took all commodities and everything in a recession. We are going in a expansionary phase upward. This is expansion. It's inflationary. Do not mess this up. This is inflationary. Big ol' INF. Inflationary, going higher. Now, the dynamics here are just like they were back in 2000. That's where we're at. Increasing interest rate environment. If he's going to taper, if he tapers, what's going to happen is rates are going to come up. Rates are going to put pressure on stocks to go down. They're going to put pressure on bonds to go down. But we've got this behind us in the real estate market, going to basically press real estate far higher. We're seeing the prices go through the roof. We are in the largest shortage, biggest home appreciation area in an expansion in the real estate cycle. Now we're going to kick the new home builds on. This is what we're looking at. We're looking at new home builds behind me. We got to kick this and drive it upward. This is going to drive inflation on top of the money they've already created. This is going to be a very inflationary environment. We've got a buy signal here. We had a buy signal here for commodities, and we had a buy signal here for commodities as well at the beginning of these periods. Everything is aligned. Everything is intact. Do not be afraid. I want to get that across. Do not be afraid. If we see this thing come down, you should know it, because we're going to see pressure in the stock market. And this is so leveraged up over there that it could bring just basically everyone's going to be selling to get liquidity up. So we could see a stronger dollar. We could see people selling stuff. And what I'm looking for is if this comes back and if it impacts our companies, and I don't know the exact, how exactly this is going to play out. We're going to use our technical analysis. We're going to try our best to get the bottom. We're going to cost average in. We're going to do everything that we've learned on the channel. We're going to implement it. Comes on down. What I'm doing, uranium and oil and natural gas. Because when this thing reverses, it's going to go. Because we're going to have this backdrop of inflation behind us and increasing interest rates, and the money's going to come flooding over to us. And when people get afraid, what I think may happen, this could be even a bigger boom than what most people think. I think money is going to leave crypto. I think it's going to leave the Nasdaq and S&P 500, and I think it's going to leave bonds. And this is going to be a massive rotation over. John Paulson has this right. If you watch John Paulson, a hedge fund billionaire, he's big in gold right now. And he's the only guy that I've ever listened to that's made any sense in terms of these types of rotations. So I'm pretty sure he's right. And from what I can tell and what I can gather in all of my research, it's going to say he's right. And that's how I'm positioning. Now, if we get a blow-off kind of move here in the short term, we could see platinum down in the 800s even. We could. Don't be afraid. I'm going to be right next to you buying this stuff up. This is how you make a lot of money. The opportunity is going to come right in front of us, where if this thing comes back, and it might not, but if it does, this is where we got to load. Because, and guys, do what is best for you. This isn't financial, it's just my financial opinion. I'm explaining what I'm going to do. I know I'm getting a little bit excited here because I think it's coming, and I think very good opportunities are right in front of us. But you have to grab them when they're there. This isn't, I'm going to wait. I'm going to wait for lower and lower prices. This is going to come. I think it's going to sell off a little bit. We're going to get our area of opportunity, and then it's going to go. And it's going to be a lot of fun riding this thing higher. So just wanted to talk about it. And if we don't get that pullback, that's why we don't want to sell out. That's why I'm not selling out. If we don't get a pullback and the thing just takes off, then we're going to get a huge purchasing power gains against stocks, I think, over this next 3, 4, 5 years, or maybe even up to 10 years. I don't know how long this real estate market's going to last. It's probably going to last till 2028 or something like that. So just wanted to talk about that. Wanted to show you kind of what's going on. I just grabbed a couple of articles kind of randomly that just popped up right off my screen in the beginning that were put out today. So I wanted to talk about this, get you guys kind of your minds focused in on it. Don't be fearful. Be logical. Get a strategy. Get a plan. Watch some of the videos that are in my playlist if you guys want to. Subscribe to the channel. We're going to ride this thing together, and it's coming. I'm super excited for it, and I think it's going to be a very, very big move, bigger than what most people have seen in anyone's lifetime that's alive right now, unless they were in the 70s. I think it's going to be bigger than that. Because I think it's going to fall in line with that thesis 2.0, that video I put together. And watch that, which I released yesterday. Thanks for listening, guys. Subscribe to the channel, give me a thumbs up, do all the cool stuff. We'll see you next time.